What a night. Overnight, global markets just absolutely caught fire. Seriously, it was a sea of green across pretty much every screen, all lit up by one single piece of news that sent this massive jolt of euphoria through the entire trading world.
And nowhere was that excitement clearer than in India. The Nifty 50 index just rocketed up by a massive 3.78%, closing at 23,997. Now, to put that into perspective, this was one of the most powerful single-day rallies we have seen in months. It's almost like investors, just for a moment, completely forgot what fear even feels like.
So you're probably asking, what on earth caused this incredible risk-on party? Well, the headline was simple. It was powerful. A reported ceasefire between the US and Iran over in the Middle East. And of course, that news sent crude oil prices tumbling and stocks soaring. But you know how it is. The headline, it almost never tells you the whole story.
And that's where we need to dig a little deeper. Because when you start to actually look at the fine print of this so-called deal, you realize it's less of a solid peace treaty and more of a, let's say, a negotiation starter pack. So let's break down what's really happening on the ground.
Okay, and here is where things get really messy. On paper, the deal sounds great, right? It promises coordinated, safe passage through the Strait of Hormuz. But the reality on the ground? The UAE and Kuwait were reporting missile and drone attacks after the truce was supposed to have started. And get this, while Israel technically backs the deal with Iran, it has pointedly excluded Lebanon, and its prime minister remains deeply skeptical. So what we have is a ceasefire on paper, but it's still pretty much chaos on the ground.
And you can see this exact same disconnect playing out in the oil market. Oil futures, the contracts for delivery down the road, they dipped to around $95 on the news. But the spot price for actual physical barrels you can get today is way up near $125. That huge $30 premium, it tells you everything you need to know. The people who are actually moving the oil tankers, they simply do not believe this calm is going to last.
So why that massive premium? Well, for one, about 13 million barrels per day of oil production are still offline. Key tanker routes are completely scrambled. And experts are saying that getting this supply back to normal could take months, not days. So in short, the futures market is trading on hope, but the physical market, it's priced for a very messy reality. All right, so with this huge gap between the headlines and what's really going on, how are traders supposed to play it? Let's open up the currency playbook and look at the key levels that are really defining the action right now.
First up, the US dollar index, the DXY, which basically tracks the dollar's strength against other major currencies. Now, with risk appetite surging, the dollar naturally weakened, and the tactical view right now is to sell on a rise. What that means is traders are looking for any little pop-up towards that key resistance at 99.18. That's the long-term 50-week moving average, as a spot to potentially sell. If the weakness keeps up, the key support levels to keep an eye on are 99.00 and then down at 98.60.
But listen, the technical chart is only half the story here. Today is all about a massive data dump from the US. The main event, the one everyone is waiting for, is the Core PCE number. That's the Personal Consumption Expenditures Index, and it's the Federal Reserve's absolute favorite way to measure inflation. We already know from the latest Fed minutes that policymakers are getting a little nervous about some weakness in the labor market, but their stance is crystal clear. They are completely data dependent, so today's numbers, absolutely critical.
Now, hopping over to Europe. The euro really tried to break out yesterday. It really did, but it just stalled right at that 1.1730 resistance level. So now the playbook has kind of flipped to buy on dips. Traders are going to be looking for any drop towards the support around 1.1656 as a potential entry point, but that 1.1730 level, that remains a major ceiling for now.
And the bigger economic picture for Europe really backs up this cautious view. Recent retail sales actually slipped, and the upcoming German industrial production data is only expected to show a pretty modest improvement. The recovery there is more of a slow simmer than a strong rebound. And at the same time, the British pound is just kind of stuck in this no-man's zone, basically waiting for the Bank of England's credit conditions survey to get a better read on financial stress in the UK.
Okay, let's bring our focus back to the market that had the most explosive reaction of all to this ceasefire news. India. The rally there was truly something to see.
So looking at the currency first, the Indian rupee has just been on an absolute tear. The key level that everyone, and I mean everyone, is watching is 92.57. It's a major weekly pivot point, and the pair closed just a hair above it. Holding that level is going to be absolutely critical for the rupee's strength to continue. If it can hold, the next resistance to watch is up at 92.90.
So, what's been driving all this strength? Well, the rupee just chalked up its fourth straight session of gains. The biggest tailwind, by far, came from that plunge in crude oil prices, which, as you know, is a huge positive for India's economy. And, adding to that good mood, the RBI governor came out and clarified that some recent foreign exchange curbs were just temporary speed breakers. That really helped to calm market nerves. And now, let's talk about the main event, the Nifty 50 index. That monster rally yesterday completely shifted the dynamic. Now the strategy is buy on dips. The index closed right on a really critical long-term level, the 50-week moving average, at around 23,993. This whole area, down to about 23,763, now becomes the key support zone that the bulls absolutely have to defend.
You know, the most crucial thing about this rally was its breadth. This wasn't just a few big heavyweight stocks carrying the market higher. No way. All 16 major sectors advanced. The mid-cap and small-cap indices also surged over 4% each. It was a full-blown, all-in, risk-on party across the entire Indian market.
Which brings us to our final and maybe most important section for today. Look, the market has rallied hard on the hope of peace and de-escalation. But now it's about to face a very, very different kind of test. You could call it a trial by data. So, later today, we are getting a complete health check on the U.S. economy. The headline act, of course, is that Core PCE inflation report, which is expected to come in around 3% year over year. But that's not all. We also get GDP revisions, weekly jobless claims, and personal spending data. It is a full slate of potentially market-moving information.
And that really leaves us with the billion-dollar question for today, doesn't it? Yesterday's rally was built entirely on the hope of a ceasefire, a story that, as we've seen, already has some serious cracks appearing. Today, that narrative of hope is going to collide head-on with the hard reality of economic data. So the question is, can this rally withstand that impact? Well, we are all about to find out.